What is going on, everybody? And in this video, we're providing a state of the market and stock picks for February 28th, 2023. So that sounds like something you're interested in. Consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, coming into today, we actually kind of pushed up. You can say gapped up if you're looking at the SPX here, but we came in pretty strong until about 10 o'clock, where we got pending home sales, which blew away expectations this morning, which is actually pretty crazy. I believe it came in. Let me actually look here real quick. The exact numbers were it was surged to 8.1 month over month, following a downward revised 1.1. Which is pretty insane. The amount of people that are trying to jump into homes. Now, this is something I wanted to kind of talk about, something I've talked about up to this point. A lot of this information is very misguiding. There's a lot of different realtors that are out there trying to provide tons of incentives for people to get into housing because it's hard for people to uh, to to buy homes or to qualify for homes right now. Considering that rent is high, a lot of realtors are saying, well, why not just buy? Rent's high anyway. And then a lot of new developments are providing tons of incentives to try to get these houses off the books. Now, we have to understand that even in the housing sector, um, this is a normal upcycle time period. People are getting their tax returns and using that as a down payment or multiple payments. It really just depends on where they're coming from. But ultimately, people are expecting perhaps things to get worse. So they think that maybe rates will go higher. So they'll buy now. Um, just my opinion, but from what I've seen and what I've researched, that is what it looks like is going on. The housing industry is going to continue to fall. You're going to get ups and downs. Everything's not just straight up. Everything's not just straight down. If you're in that stock market at all, you know this. We don't just go straight up and we don't just go straight down. If it's going straight up or straight down, you know it's going to be corrected. So we haven't had a true housing correction in a very, very long time, since 2008. So we are due for one, and the pullback that we have is very minute. People are getting excited because pending home sales. You have to understand, just because it's pending doesn't mean it's actually finalized. That is the biggest concern, I think, in my opinion, when it comes to that. Um, and the thing is, it's been revised down. Like I said, a lot of these expectations are so far down that if it hits over, it's like, wow, that's amazing. This is great. When in fact, it's not. Things are not better, right? The amount of incentives that are going out there for people to purchase these homes at ridiculously high prices. You have to understand that a lot of realtors are doing whatever they can to sell these homes. If they got to throw in the kitchen sink, they'll throw in the kitchen sink, and that's exactly what is happening right now. So you have to be very, very careful. I've been talking about this for a couple months now, about this, how this revamping of reports and everything is throwing things off. They are way off from what is going on in reality. And the problem being is you're reporting this data. What's going to end up happening is that the Fed are more likely to come in with a 50-point basis move because the economy can apparently take it. So if people aren't struggling now, seeing that that essentially savings rates are at all-time low, and that people are essentially uh, credit card debt is increasing at an all-time high, right? You explain to me where in there that things are okay, that the economy can take it. Just going to the grocery store can prove that to be incorrect. So, with all that being said, where we're currently situated is, again, a very interesting point. Um, this week isn't a big week for any kind of data, right? We have a lot of housing stuff, a lot of normal stuff that happens each and every week. So yes, we'll get job numbers every Thursday. We'll get some more housing data, but really, what matters is is the core, and we got a while before the core. And the next thing before that is non-farm payrolls, which is next Friday. And so we're kind of leading up to that. Now, this week, I'm kind of essentially projecting the market to hopefully push. Like I said, it attempted to push and it got those numbers, which isn't a good sign, right? Like, yeah, that could be essentially taken as a positive sentiment, but bad in the sense that it could cause the Fed to raise rates even more, and more of an incentive for the Fed to raise rates. And again, it's the same thing with the jobs report. If we have a very strong jobs report on next Friday, you can guarantee it's going to be more of an incentive for Fed to raise their rates. And then you're going to have a core followed right by that, and you're going to have monetary policy, which in my mind, I'm heavily leaning toward the 50-point basis move is where I think we're going to end up heading, especially that is very heavily dependent on the core, which I think is going to be up dramatically. So with all that being said, things are in a bad situation, right? This week is really going to be a lull week. I don't really expect much. I wouldn't actually be surprised if we chopped essentially between this 40.20 mark and the 39.80 mark, essentially all week, or potentially even drop down to the 39.40 mark and then play this range. I think could be a strong possibility. Almost a 100-point range, 80-point range, something I've talked about, to kind of shift between the two 100-point ranges, 80-point ranges when we're waiting for big news. And I think that's kind of what we're set up. So tomorrow, if we do fall below the 39.80, I think we're headed right towards the 39.40. If we may remain above here, then we'll reattempt, unless that reattempt is tonight and then we get rejected again. If we do break out of that tomorrow, again, there's no real incentive for the market to go up. Right, we got more disincentive to go up because of the fact that there's a lot of bad news of a potential 50-point basis move, and I don't think that's even still priced in. I think that's still sitting at 3,800. Of course, the odds will increase the more data we do get. Data like this wouldn't improve those odds because it would make it seem like the market would take it as potentially selling, but it's still holding, right? It's not enough to move the market. It's just more of a, hey, look at what's really going on here. No, things are better when in fact they're not. Again, this is a normal cycle for housing. It normally picks up around this time and more so in the spring. So just be mindful of that. But again, I think we are coming into that natural normal cycle of the stock market in which the market does sell off heavily. So you have to be mindful of that. We're getting out of earnings. We're about 1 month away for Q1 earnings. How crazy does that sound? It sounds like we just got out of Tesla and Apple earnings, and we're only 1 month away from the bank earnings on all that again. It's probably about a month and a half from now. So we are that far away to the next Q1 earnings cycle. So with that being said, we will see again. I think again we're on a ticking time bomb, but it is what it is. The market's going to chop until it gets new data, and again, the data we have this week isn't going to be very pivotal. Next week will be the pivotal, unless again some black swan appears and crushes the market. Until then, we play what we have in front of us. So with that being said, again, like I said, I'm watching this line, this 39.80 tomorrow. I want to see how we land above this. If we stay above it, again, I think we're retesting 40.20. See if we can get enough momentum to break through it. Otherwise, again, I think we're going to 39.40. Tomorrow really depends on how we land on this particular line right here. So watching that tomorrow. Let's see the dollar. Again, the strength in the dollar, the break and the retest. Let's see if the dollar can hold over 5 and continue up. Jump back over on the daily here. First rejection may pull all the way back here to the 401.20 mark and then potentially lift back up. This is the zone where we really need to be breaking this 105, roughly around the 105.60 mark. If we can break and hold above that, the dollar I think is going to make new highs. So watching that, be very mindful of the dollar. Bitcoin is continuing to chop and get nasty. Again, I think this thing is going to start dropping off here along with the market. I thought maybe it could be used as a hedge. It really just depends on what's happening. But we wait and see. So again, we can assume all day. It's better to watch price action right now. Price action is very confused. It's trying to project 6 to 8 months out. obviously there's a thesis that I have that things are just bad and they're not getting better. So I do project that we're going to go down further at some point within the next 6 months. When that is, I don't know, but I have to. That's why I watch price action day to day to try to determine when that will be. And you get that, you see that first and foremost watching price action every day, and then you make a move from there, and then it feeds into whatever thesis that you have. So we're watching that. We'll see what happens there. Tesla showed a little bit of strength, but again, it's still playing range. You can't really play into this thing going higher or lower. It's just right dead set in the middle, no man's land, just like the market is. So it's essentially sitting at 206. It needs to break out of the 218 or break below the 130 or 193 to really have a direction here. Again, I think that's waiting on the overall market sentiment. 50-point basis move. This thing cracks and heads back down to 140, in my opinion. But we'll see. You have to wait and see. And again, that may not be until next week, but the market isn't going to start getting excited when kind of hopium's been shot with some pretty hot reports. So let's see. As far as Apple's concerned, again, I think this thing's going to correct at least to 133. Strong possibility. It's not as strong as Tesla. It's actually broken and retested the support. If you were to draw a line here, you would see that. So it's breaking the trend, break retest and start selling off. NVIDIA, one of the other strong ones, could be a break and retest. This thing needs to hold roughly the 235. If it breaks below that, it's got some support here at the 230, but then you got a pretty big gap fill here down to the 218. Again, I think we're going to fill that. And you already have this other parabolic move as well. And the nice thing about NVIDIA is that it is a chip manufacturer, right? And so they do a lot of different things, but primarily based off of chips. And understand that that because of the popularity of AI and ChatGPT, the amount of numbers that are producing from using ChatGPT are fueling NVIDIA's fire and uproar to where it's currently at. So it is going to be it's going to take a lot more for chips to kind of sell off because of that fact, because you have something that's going to prop up the chips at this point. Now, obviously, if there's fears of recession and 50-point basis move, that's going to come down. But right now, that's still new. So the whole new shininess and then their earnings last week helps a lot with this. So with that being said, you have to let that dilute itself, and then it will start dying off. So give it a couple more days, give it a week, and it will start dying off unless the market starts selling. Again, the market is just kind of waiting for new data, more so next week. Whether that's if we push back up to 4,100 or we start just selling off. I don't like the fact that price action is telling me that the market wants to sell now. The market's not willing to take the risk right now. That's what price action is telling me. So we'll see if that's true or not. So this is why we wait day to day and see how we open. So BA, again, break, retest. Is this the continuation of the BA selling? If it can't break back above the 204, continue to see this thing selling off to at least 179. We'll see what happens there. It needs to take back a lot of this parabolic move that's had over the past couple months. So I need to wait and see how that does play out. JP Morgan, again, trying to break roughly the 144. It can't do it. It's having a real struggle. So we'll see if we come back down to the 138. And if we break that, again, support here at 131. Again, everything is just waiting and waiting and grinding and grinding. I know it's a pain. It's miserable to watch. It's like watching paint dry. I completely understand that. Trying to make these videos shorter as time progresses until we get some sort of data that's going to move the market. But nonetheless, we'll see. I know AMC had a very monstrous move today. Thanks. Shout out to Ray Savage. He's one of my trading buddies I've traded with for many years. Nonetheless, again, this is what kind of happens around this time, right? People start pumping AMC, and a lot of these GME didn't really get a pump. That might be pumped tomorrow. But when the market doesn't move, a lot of these mem stocks will pump. So maybe something to watch tomorrow. Again, I don't suggest trading these. especially if you're new, but especially because it's kind of topping out right here, to be honest. It might actually sell back off roughly to around the 468, but we'll see how that does play out. Nonetheless, the market isn't going to do much until it gets new data, and whether that's a black swan event or not, it will pretty much just play a tighter range until it gets some news, whether that's from the Fed or more talk of a 50-point basis move, or China action or Russia action, or whatever the case is. Until we get new news, the market isn't going to do much. There's no point in pushing up because of the fact, again, we're coming in a 50-point basis move. You're killing demand more, and that's what it does. And so we will see where we go from here. So if you made this far, I do appreciate you. Go ahead and drop a thumbs up. Till next time, I'll see you guys later.